Thursday brings the latest interest rate decision from the Bank of England, and there's mixed thoughts. Many are claiming that we could see the Bank of England step in ahead of the budget, cut rates in anticipation for a hike in terms of taxes, which has been all but confirmed. We don't necessarily know the breakdown of those tax hikes under the autumn budget, but they're certainly coming in one way or another. Nonetheless, we have plenty to get into, whether it's the direction of travel for inflation, the jobs market, and the impact on the likes of the FTSE 100 and a pound. Let's look into the forthcoming Bank of England interest rate decision taking place on Thursday, the 6th of November. So in terms of market expectations, let's kick off with that. And we can see that markets are currently pricing a 35% chance of a rate cut this time around. So the base case scenario is that we see a pause. Now, from the outset, I think this is the most likely thing to happen. Central banks, by their nature, aren't necessarily in the business of guessing what policy will be down the line and preempting that. Instead, it makes more sense that they wait to see exactly what policy is. They could either try to plan out exactly or scope out exactly what the implications would be on the economy and take action, or they could wait until the data really sort of feeds through and they see exactly what those policies do to the economy. There's two sides of it, because on one side of it, the expectation of potential tax hikes could bring potential weakness in terms of economic activity in the UK, and therefore a need for the likes of the Bank of England to step in with looser monetary policy. However, the flip side of it is, if we look back at the last budget, where we saw an increase in terms of some specific taxes, that had an inflationary impact on the UK. And we saw a sharp spike in particular for April inflation. And so I guess there is concern that we could see a similar kind of thing, right? So it has a downward effect on economic growth, but an upward impact on inflation. And therefore, it doesn't necessarily make sense for them to, number one, preempt the actual announcement itself, but also does it make sense for them to preempt what that policy will do in terms of the economy? So that really sort of raises question marks around the December meeting as well. Nonetheless, you can see that as things stand, a 55% chance is attributed to a cut for December. So essentially, it's a sort of coin toss, really. Markets are on the fence on what happens for December, instead feeling a lot more confident around February. So I guess the question mark is, will we see any shift in terms of expectations around the December meeting? And of course, the question mark is whether we see any significant change in terms of policy this time around. And markets have attributed roughly a third chance that we see a rate cut. I personally don't necessarily think that is likely. Now, that's despite the fact that, as I have alluded to recently, UK inflation actually has been under control over the course of the past 5 months. The one big problem with UK inflation data is the April figure that, like I said, has some of the impacts of the budget, but also the price cap shifting for UK energy prices. But if you look at the 5-month annualized, where are we? 2.4 for the core, 1.95 for headline. So numbers tracking at a pace sort of consistent with being around target, particularly for headline inflation over the course of the past 5 months. Now, we also have another 7 months to account for here as well, and so things will change over the course of the next 7 months that could potentially bring us back down to target. But it really depends on whether we see inflation consistent with the trend that we've seen over the past 5 months, and that's not a given. And key to that is because we've got this budget coming up, and the budget could be the kind of thing that sees another spike, much like we saw at the beginning of this year. So there's great uncertainty around that. So keep an eye out in particular around commentary that signals the outlook in terms of how they might react to the budget. I think that's going to be really important this time around if we don't necessarily see them moving rates. In terms of why many people think that we could start to see them move at this meeting, part of it is the fact that inflation appears to be relatively under control. Part of it is also the fact that we've been seeing some concerns, the latest claimant count on the rise. And then we've also seen the unemployment rate on the rise. So the jobs market has some concerns in terms of a weakening of the jobs market. The inflation metrics, again, have been relatively under control over the course of the past 5 months. And there's concerns here that we're going to see a budget that is essentially anti-growth within the UK. Now, in terms of the implications for markets, part of it will be viewed through the prism of whether we are expecting to see rate cuts really come into fruition. This is the 2-year ratio between UK 2-year and US 2-year. You can see here that we've been seeing a decline, and that has been leading to a decline in terms of cable. Now, cable is a really interesting one because if we look here in terms of the chart, let's just look from a weekly perspective. There we go. So this is the weekly chart for cable. Now we've come into this sort of ascending trend line. If we look on the monthly, you can see that actually this recent rally does show the possibility of sort of topping out soon enough if you look at this wider context, because we still do have this long-term downtrend, right? So this looks like a potential area where we could top out. And now we've broken through the 1.314, which essentially now completes the double top formation. You can look at it through a number of prisms. Number one, you could say, well, we're going to replicate this. I'm trying to make it so that you don't get that out of the way. There we go. So 585 towards the downside would give us a potential downside target of 1.255, that kind of area, right? So just above the 76.4 fib. Another way of looking at it is to project the highest of the double top formation, which would give us, it's up to around here, 6.5. So does that take us to, yeah, so that's pretty much slap bang on the 76.4 fib. So points towards a potential deep retracement coming into play here. Now, essentially from my thinking, I think we've only just broken this neckline. There's a good chance that we see a decent period of downside coming into play here for cable. Now, if we look at the short-term time frame, you can say, well, okay, if we have this view that we could play towards the downside for a bit of time here, how are things shaping up? Well, we've got this sort of sell-off, consolidation, sell-off, consolidation. We're in the next leg of a sell-off. It's a good chance this could roll on for a bit, quite frankly. Here's the hourly time frame, and essentially you can sort of pick the bones through this move in a little bit more of a granular detail. 76.4 fib there. We see consolidation, the breakdown through support coming into play here. It's easier to sort of track your swing highs. So the latest swing high, 1.316 here. So rebounds are likely to be sold into, in my mind, unless we break the 1.316. So not necessarily looking too bullish here for cable. In particular, if we come into this latest Bank of England meeting, if we see them cut rates, then yeah, particularly that's going to be bearish. But I don't necessarily think markets need that. I think the fact of the matter is that markets are pricing a 55% chance that we see a rate cut in the December meeting. If the outlook from this meeting provides the indication for markets that it's more likely we're going to see a rate cut in December than currently priced, then again, that sort of leads us into that position where we see cable starting to roll over. And right now, the US dollar has started to come into a period of relative strength. So that could again sort of play into this narrative. Now, in terms of the FTSE 100, it's done particularly well over the course of this year. And you can see that we've actually seen a sharp pullback with some of the weakness seen in US markets, I would primarily say, on the Tuesday, which is when I'm recording this video. You can see that quite rapidly being regained. Really, we need to know whether we're going to break through that prior high of sort of 9770s, 9800 kind of area. If we don't, yes, we could roll into a deeper retracement, kind of similar to this, right? You see a sharp pullback here, decent retracement, and then you move into the move lower. So a lot of the time these retracements come in a sort of ABC style move. At the moment it's been, I'd say, a 38.2 retracement by the looks of it, so relatively shallow retracement. Let's see, 38.2, there you go. So we've come into a sort of relatively shallow retracement. We're already regaining ground. There is a potential for a deeper pullback to come into play here. Now, you could say, well, we're coming into a period where the UK budget is going to put pressure on expectations around UK growth. It could put upward pressure on inflation. So that could drive potential downside over the near term. You have to also be aware of the fact that the FTSE 100 isn't necessarily super aligned to the UK economy. FTSE 250 is more so. FTSE 100 heavily aligned with a number of different factors like commodity prices and alike. Now, I'm just out of interest going to behind the scenes look at exactly what's been driving the FTSE 100. So at the moment, we're seeing strength in terms of some of the consumer non-durables, some of the healthcare stocks, but weakness in terms of mining stocks in particular. Fresnillo, Antofagasta, Rio Tinto, then Rolls-Royce, Boeing, Glencore. Yes, it's an interesting split, but yeah, that's not all just a UK domestic story, that's for sure. So it will have an impact, but the impact is not necessarily going to be as big as some might believe it to be. So keep an eye out for this. I mean, ultimately, the trend is your friend. The trend remains very bullish for the FTSE 100, hence we're already regaining a significant amount of ground. But if we do see a relatively dovish outlook here from the Bank of England, it could provide another leg higher here for the FTSE 100. I hope that's been useful. Make sure to like, subscribe and follow for more. My name's Josh Mahony, Chief Market Analyst at Scope Markets.